Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And I've left my lines on the chart from last week, which were drawn right here. Last week I said that the market had closed on strength, with that candle being right over that 20-period moving average. And my forecast was that we would go and set a new high. Guess what? One thing you cannot predict are the tweets that Donald Trump sends out, especially when it comes to China. So on Monday morning, actually it was right before the market opened on Monday, news broke of the tweet, and it went right down to this opening price right there. And what's most amazing is that on Monday, this was a tremendously long green candle. So we really thought we were right back on track. Tuesday, negative market hits once again. And what the most interesting part of this chart is that we have 4 out of the 5 candles for this week were green. And what does that mean for next week? Well, I'm going to go right back into my forecast right here, and I'm going to keep this angle just like that. If you look at the shadows from today, which is Friday, the 10th as I record this, and you look at the 9th, this is a hammer pattern. We have 2 back-to-back long shadowed candles right there, and the volume today had dropped from yesterday's volume. So that's telling us the selling pressure is easing up. Now, the other thing that you have to look for with regard to patterns is not just with the charts, it's with the news. It seems as though every time negative news comes out about China and the U.S.-China trade relations, it seems that good news follows and the market reacts to that. So I'm going with a long position into next week. I think we could easily get back up to that 20-period moving average, and we might even go beyond that. But I'm being conservative here with at least a move back to where we were last week. And I'm going to erase this line from last week. This, by the way, is my flatline horizontal resistance. That will hold. Now, in addition to what we're seeing in the upper portion of this chart through the candles, we see that the stochastics has turned up and the CCI has also turned up. The CCI is almost right at that buy indication, that buy signal, and stochastics are about to cross as well. So I think we're going to see the same thing on the stochastics with a buy signal and eventually higher prices down the road. Now, if we look at the rest of the markets, we're going to see the same picture. And in fact, with the Russell 2000, you're going to see 2 back-to-back hammers. One's red, one's green. The color of that candle really doesn't matter. What does matter is the length of the shadow. And so the stochastics and the CCI are turning up once again. I'm going to erase this. Eventually, I think we're going to see higher highs on the Russell 2000, but we're going to have to play it week by week, and let's hope that the president doesn't send out any more tweets to affect the market. So the Russell 2000 right there is looking more bullish, even more so than it did last week. So we're going to go with that. If we look at the Qs, this is the Nasdaq market again. Look at that. 2 back-to-back long shadowed candles, hammer pattern right here. I'm going to go with a move right back up to the 20-period moving average. That target eventually I think will be hit, but I'll erase that line for this report to clean the charts up, and that's the forecast for the Qs. If we look at the SPY, which is the S&P 500, again, we're seeing the same thing right across the board. I'll have to condense this price axis right here. This line is going to hold as resistance. Eventually, I think we'll hit that target, but I don't think we'll do it next week. I think we will, though, continue to move up and test that resistance as the stochastics and CCI move closer to a buy signal. Notice that today's high on the spiders was higher than yesterday's high, and we see that stronger volumes. That tells us that the buyers are starting to move in. If we look at the VIX, this is going to be very interesting because the VIX is a leading indicator. Look at that. We went right up to resistance here, and then we pulled back from resistance. I'm going to extend that out to the right because that will most likely hold as resistance, and I think we are going to see the VIX pull back even below that 20-period moving average. I think eventually this support level will hold. I'll keep that right like that, and you'll see that we are now stuck in a trading range for the VIX. Stochastics are crossing with a sell signal, and the CCI is crossing below the 100 line right there, which is a sell signal. So keep your eyes on the market, keep your eyes on your stop loss orders, and make sure you stay tuned to the Market Guys each and every week. By the way, a week from this coming Monday, we're going to have an open house Q&A. The registration link is on the front page of our website, and I hope we'll be able to communicate there. You can ask me questions. I'll analyze stocks, and as always, it's an action-packed hour of fun talking about the market. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.